The very last of the year's real estate season is wrapping up. The data is already showing us how the year will end and how 2022 is shaping up. What are the risk factors facing the housing market? How risky are they? That's what we're looking at this week in the Altos Research Market Update. Each week, Altos tracks every home for sale in the country, all the pricing, all the changes in pricing, the supply and demand, and we make that analysis available to you before you see it in the traditional media channels. And so here is what the data is telling us right now. It's Monday, October 25th, 2021. There are currently 423,000 unsold single-family homes on the market in the U.S. Total available inventory keeps ticking down each week, as you'd expect for this time of year. We're currently just 3.3% under this summer-September peak. Often, inventory is dropping significantly by now, and certainly by November. You can see the last week of October I've highlighted here for you each year. In 2018, as rates were rising, demand weakened. You can see a slight extension, and inventory actually hadn't fallen yet. That was setting up January 2019 to start the year with greater inventory than the previous year. Remember that over the past decade, as Americans have invested so aggressively in owning rental properties, each year we have fewer and fewer available to buy. So inventory shrinks each year. You can see the band each year is lower than the year before. So when will the shortage end? Well, as of right now, it looks like we're going to end the year at new record few homes for sale. So just over 300,000 to end the year. This means that next spring we'll have fewer than 300K. But mortgage rates are rising. And because the economy is so hot, you could imagine that they continue to rise, or maybe even rise significantly from here. Rates are finally back above 3% for the 30-year fixed mortgage. And at some point, it's going to start to feel expensive, unaffordable, or less affordable to buy the existing homes. That'll slow the market, and inventory will climb like it did in 2018. If consumers feel that quickly, maybe we have to revise this forecast up. The forecast looks like this. So 300,000 at the end of the year. We're also still looking for any inventory from the end of the forbearance process. There's no sign yet of any new listings coming through those, even though there's hundreds of thousands of homes wrapping up their forbearance this month and resuming their mortgage payments. If inventory does any unseasonal spike in November, we'll see it right here and we'll know exactly what it is. Don't count on it, but this is where we are watching. By the way, it's already time for us to announce our November webinar, Thursday, November 11th at 10 a.m. Pacific. For the full details of the year, the latest on the forbearance, the full view of what's coming for 2022, join us for that webinar. There's a link to register for the webinar in the description below. Click that and join us November 11th at 10 a.m. Pacific. That brings us to pricing. Recall that the big reason none of the forbearance mortgages are panic selling is because everyone made so much money on their homes this year. The median single-family home price in the U.S. is $389,000 this week. That's down just a smidge from last week. You can see the dark line here. Each year, October pricing stays strong, and that's exactly where we are. In November, prices will tick back a little bit. That's not the market tanking. It's simply the holidays. Note that this week you'll see headlines from the Case-Shiller Index. It'll still be screaming record appreciation. When you hear these headlines, keep in mind that the Case-Shiller Index that they announced tomorrow, Tuesday, the 26th, is calculated on based on transactions that happened way back in July and August. And the Altos data that we're reporting now is really for transactions that will happen in the future, November, December, January. So they're active now, they get an offer in November, they close in December. But in the data right now, we can see what's happening and what's coming. So the Case-Shiller index is looking backwards, like what happened a few months ago, where the data we're looking at here is what's right now and future. Keep that in mind when you see those headlines this week. One of the ways we see the future is in the price of the new listings. That's the light colored line here at 359,900. That's actually a tiny bit up this week. This tells us that demand is holding up late in the year, and maybe even increasing. It also tells us that the Case-Shiller that they report like next January will still be plenty strong, though backed off from the record levels that it's now reporting. November has significantly fewer new listings, and so the price will drop accordingly. Again, it's nothing to panic about. It will be nothing to panic about. It's just Thanksgiving. We've been reporting a lot on price reductions lately as the indicator of demand. So we know that demand is high because fewer homes have to take a price cut than normal. 28.4% of current active listings have taken a cut recently. Price reductions decreased again this week, so that indicates continued demand, maybe increased demand. Though we've been talking about the potential impact of rising rates, and you can really see that impact in price reductions. The yellow line in this chart is 2018. You can see it started strong with fewer price reductions, but demand weakened during the year with rising rates. 2018 finished the last period of year with the most price reductions compared to other recent years. So 2018 was the one year we've had rising rates. They went from 3.5% to 4.5% at that time. And that's the signal to watch for 2022. Finally, this week, let's check on our immediate sales tracker. So October sales rates have not really abated, with 23,000 homes going into contract essentially immediately after a listing this week. I continue to expect this to ease back over the holidays, but there's so much pent-up demand from earlier this year. There's lots of buyers who are now jumping on any opportunity they have. So immediate sales have stayed strong for the well-priced properties. Even if there are fewer bidding wars happening, the American consumer is still very, very ready to buy their house. So immediate sales has not backed off at all yet. Okay, that's all the data we have time for this week. Reminder that if you're a realtor and you're working with buyers and sellers right now, if you're dealing with clients who need to understand the conflicting headlines, is it record high, is it cooling? Like they may still be holding out for some kind of crash that isn't coming anytime soon. So they need you to get them the data. To do that, go to altosresearch.com and book time with our team. There's a link in the description below. We'll review your local market with you and guide with how to talk to people about the data. As always, subscribe to the YouTube channel so you don't miss these videos each week. And you can now register for the November 11th webinar. So link in the description below. Click that, join us. We'll see you next week.